you might not even know that the earnings are out, and then there's a little bit of gyration there, but largely an unchanged reaction thus far. Let's welcome in our panel for some live reactions to the story of not only the day, the week, perhaps the month, as we finally get the big AI hardware build-out player. We get their earnings announcements. We've got George Tsilis, Kevin Green's back with us as well. Guys, first numbers that I'm seeing. Looks like a miss on EPS for the first quarter. 81 cents adjusted EPS. Revenue does beat 44.1. Adjusted gross margin way below expectations at 61%. Data center revenue also a slight miss, 39.1 billion. I'm scratching my head here, KG, because these numbers on the surface don't look all that good, but I don't see this stock reacting negatively. Am I missing something?
You're seeing it gyrate here a little bit. So a couple of things. They did make a mention of several different things. They incurred a $4.5 billion charge due to the H20 inventory issue. So we want to be mindful of that. That's going to be a Q1 fiscal 2026 charge here. Unable to ship an additional $2.5 billion within the quarter because of these restrictions that are taking place. They call out AI agents as becoming more mainstream. The outlook is looking for around an $8 billion loss for the H20 when it comes to revenue here. And Blackwell supercomputer is now full scale in production across system makers and cloud service providers. Seems like they are shipping that out here. I would say their guidance for revenue for next quarter, Alex, came in lower than the street's expectations as well. Depending on the estimates that you're looking at, I have that number up here. They are expecting around $45 billion for the second quarter. Street was looking for around about 45.9 billion is what I have for Reuters here, but there's been a wide gap there. You're also looking at gross profit margins really taking a hit for the quarter here, just the one that's reported right now because of these H20 issues, coming in at around 60.5% for gross profit margins. Street was looking for around 71%. So a bad quarter, but it looks like their guidance includes a very aggressive and very conservative estimate here when it comes to the lack of revenue generation from the H20 series. And I think given the good commentary around the Blackwell, the new Blackwell chipset, the production there, and that it's getting out into the market with ease, I think is another reason why you're seeing maybe some gyrations, but maybe some optimism here.
Yeah, George, I think Kevin's really, he's over the target here as to what the market likes is, yeah, the guidance is light. Yeah, the numbers are light, but they have an $8 billion adjustment from where they think their business would have been based off of some of this H20 revenue loss. And so I didn't have a number beforehand of what the street's estimate for that kind of markdown was going to be. But based off the reaction, it had to have been less than $8 billion. So the fact that they still had really strong guidance, but had this giant markdown around H20, this looks like a pretty strong guidance going forward.
It is. I mean, considering that markdown or write down, I think there's a possibility that the number may, if it is a little bit higher than previous estimates, I don't have the prior number as well, Alex, that this may suggest that Nvidia is going to be selling more of their core Hopper chips technologies, maybe to places like China, considering they're not able to sell because of restrictions of their more advanced Blackwell H20 chips. So if that's the case, then the profit margins for the Hopper the Hopper production line may actually be a little bit better going forward. It's pretty, remarkable to see. I mean, considering, taking a look at the EPS miss and even the guidance from a top line sales standpoint looks like it's lower, at least on the higher end of the top line revenue sales score. Even the data center revenue, which suggests that it's actually sort of a miss in the gross margin. So there's a lot of bad variables here, but look at the reaction. In the after hours, it's positive. So, this is very telling. And the reason I say this is because, the data center component of Nvidia's business is quite large, over 80%. I think one of the other areas that are sort of not necessarily outliers, but what analysts will be focusing on is the automotive segments, as well as the industrial segments, robotics. And I think that may actually be a very positive catalyst for Nvidia. So I talked to Kevin earlier today on Fast Market. You don't want to look at the essential numbers themselves. You want to look at how the market trades the numbers after the fact, maybe going into the opening tomorrow throughout the day. If it's positive, that's actually, to me, a pivot point potentially for technology advancements in other areas outside of the data center space or data center revenue, which is still quite high. And one would say that maybe it's constitutes such a large market share of Nvidia that they should start diversifying away from data centers in other areas, including their Omniverse software and services ecosystem.
Couple things that I'm going to add to this, Kevin. I'll give you another chance to, expand upon things here. As you guys were talking, I was looking more into the consensus estimates around Q2 guidance for revenue, and it seems some have elected to prior to this, take that adjustment out, and others have not. So I'll give you the low end of the range. The low end was for 41.4. If we assume that was one of the estimates that made the adjustment, this is still quite a bit ahead of some of the more pessimistic outlooks that the street had had. What I will also add is a statement that CEO Jensen Huang had written in the earnings statement. Global demand for Nvidia's AI infrastructure is incredibly strong. AI inference token generation has surged tenfold in just 1 year, and as AI agents become mainstream, the demand for AI computing will accelerate. The same tone underscored beautifully, I think, from the leader of Nvidia here, Kevin. This company is not only playing with house money, but they are very confident in their position.
They are. Okay, here, if you look under the hood, though, all of that's really great. Obviously, the market really does like it. Here's an additional positive that's going to go overlooked over the next 24 to 48 hours, Alex. The gaming and AI PC segment itself came in at $3.8 billion for the quarter. I have street estimates sitting at around $2.83 billion. That's a sizable beat. Mm-hmm. And that's also, it's a tailwind, right? We're all focused on data center and what's going to happen there. And did they guide and miss by $1 billion or beat by $1 billion? But if you have some of these other business units that have been forgotten or have been forgotten by a lot of investors, if they start to actually show some positive strength in beating the street's expectations here to the top side, that could also pad maybe some of the fluctuations and uncertainty that we're seeing with data centers. Yes, they did pretty well, but I mean, what I'm looking at from these numbers, you're talking about almost $1 billion beat on gaming. I don't think anybody had that in their poker hand here going into this report, and that's once again gives you a little bit more padding that if you have some uncertainty with the H20 situation, you may be able to make up some of that loss in other areas of their business. Very
well said. Great call out. As you look at that, it's a 30+% beat versus where the consensus estimates were, George. And not only that, it's 42% growth year over year, driven by Blackwell sales within that gaming segment. So perhaps we have seen, as you've talked about, maybe peak AI hardware build out. Maybe we haven't. But what would really help Nvidia is if this core business that was the exciting part 5-6 years ago makes a really, really impressive comeback, like 42% growth suggests it might be.
Well, again, I think Kevin brought up this great aspect I was trying to get into earlier, which is I think the data center component of Nvidia is going to be very volatile, should be expected to be volatile, and may not be the center point of the growth for Nvidia going forward. Software and services, you have to keep that in mind, is an important vertical for Nvidia. Robotics, industrial space, factory automation. I think it may move in sympathy with Tesla in that particular area, the robotics and factory automation elements to this technology. But in the core, the gaming, this is interesting because we've been talking about this cyclicality where the absence, movement higher in the cyclicality of the CPU, GPU, and computing markets, including the DRAM markets for personal computing and servers. So this actually might be a catalyst for that whole industry, as Nvidia is alluding to high demand for GPUs in gaming. So I think it's actually interesting, and I think that's maybe what the Nvidia will be trading on as we open up tomorrow. It's too soon to tell, but I think overall constructive quarter, irrespective of some of the variables which were missed by the company.
Kevin, do we got to maybe perhaps, and you can never say never, but maybe dampen expectations around how much volatility this stock can really have around these events anymore, as it's gotten so big it's much more of an apple that's still growing than, even a Tesla. Like maybe it could have been better compared to a few years ago. I mean, every dollar in this name is $25 billion in market cap. So for the fact that it's moved basically $7 high to low, I mean, we're still talking almost $200 billion in market cap. I mean, that alone is bigger than companies that we talk about on a regular basis, like Starbucks, just in its post-market earnings swing. It's 2x the size of Starbucks. So, like, at some point, this stock just can't, I mean, I don't want to say can't, but if it were to move $30, $40 like it has in the past, that would be so beyond historic that it would almost be alarming. What is your thought on that, KG?
Yeah, I would agree. Look, when we have those type of outsized moves, a couple of things happen. Obviously, the fundamentals look really decent, but also you catch people off guard, and then you also have these kind of gamma squeezes and things of that nature. That's what I kind of go back to. And in fact, we talked about these levels going into this report. It's going to be hard to break 140. We top ticked at 140 so far. Let's see what happens in the conference call. Top ticked at 140 and started coming back here. It is going to be a little bit difficult, but you got to go back and look and say, look, the experience during that time is always going to be in the back of every trader's mind and investor's mind. So even though we might see these muted type of reactions, and we have pretty much seen that over the last couple of quarters here, I think leading up to this event each and every quarter, we're going to still try to expect some fireworks, even though pushing market cap, removing market cap dollars in the aggressive manner that you're talking about is kind of abnormal. I still think it's going to be a spectator sport for any investor, even the hardened investor that's trading every day, or even the passive investor that's maybe looking at the stock once or twice a month.
George, I think some context from Bloomberg's Ian King that really kind of hammers home this point of the company that we're talking about now and the scale and success that it's had. The $8 billion, just adjustment that it's had to make based off lost sales to China, that's an amount per quarter roughly equal to its nearest rival AMD's total sales. I mean, that's incredible. And I'm looking at some of the reactions. I mean, you do see a little bit of an uptick in AMD, a little bit of an uptick in Broadcom. But in many ways, this is still NVIDIA's world, and everybody else is really just playing for a distant second. What are your final thoughts here on a relatively muted reaction from NVIDIA shares?
Yeah, I agree with you. I mean, I think the $8 billion is really insignificant. I mean, just based on this quarter's sales, under the assumption it's the same, without any growth, we're talking nearly $180 billion, based on the current quarterly run rate. So it's really insignificant. I mean, for maybe other companies it would be. But NVIDIA has got such a long runway, a headway, if you will, or head start compared to AMD and the other players out there in the core architecture hardware space, especially in the 3D visualization space. That they're going to maintain this lead for quite some time to come. There is competition, of course. You have to consider Huawei out of China, which may present a challenge, but I think NVIDIA will overcome that because essentially if prices come down and the market becomes more saturated, they'll end up selling more volume based upon the elasticity of demand becoming more elastic versus where it was a year and a half ago. It was very inelastic. People would pay up as much as they could for these chips, and NVIDIA couldn't supply them. So now I think the elasticity of demand is going to be alleviated or be relaxed, let's put it that way, and that should increase the total volume of sales for NVIDIA. It may actually compress the margins, and also might be happening now with the gross margins down for the quarter, but that may not necessarily be a bad thing, and I think the market reaction, at least right now in the after hours, it could change tomorrow, is very positive in that regard.
Kevin, do you think there's some value in just having a number, too? It's no longer, hey, we're guessing what the impact's going to be. They gave us something, whether it's conservative, aggressive, whatever. At least there's some level of certainty in this guidance of how things are going to break down. And now the market can focus on everything else that's going on in NVIDIA. And to your good point, huge growth in the gaming sectors. That makes a bounce back. Final thoughts.
Yeah, I would agree. I mean, if you can put a number to it, and especially if you can be it can be a conservative number. If they went and looked at the next year and said, look, we're not going to be able to ship anything to China. We're going to have a small variant that's going to go out there, but maybe they trickle that out fairly slowly because you don't know if the administration is going to make an adjustment or what have you. And they came out and told the market that. The market's going to reprice, which I think is really what they're doing. They're trying to be very conservative. They're going to reprice and look at some of the other growth opportunities. It's not a full-on negative that China sales sales are going to be very variable. You also then have the sovereign markets, the Saudi Arabias of the world, that's going to be ramping up and getting access to their chips as well. A market that has been kind of untapped for Nvidia over the last couple of years, and now they're going to have access. So you're kind of robbing Peter to pay Paul for their business. So I think there's a good little offset. And yes, I mean, over time, the market's going to be able to digest this impact and then continue to move forward. And as you talked about, the gaming segment, that maybe this is an outlier quarter. Well, let's hear about it on the conference call. If it's not, and it's actually the beginning of something very big, and then that puts less pressure on the data center business as a whole. And I think that's actually going to be very obviously positive for them in the near term. So conference call is going to be key, but Jensen Huang does a phenomenal job, rarely ever slips up, and I don't expect that to be the case this time around either.
Kevin Green, George Tsilis, brilliant analysis as always from both you gentlemen. As we go into overtime, our extended coverage continues.